Hello, it's a rather wet and miserable Thursday the 12th. I'm FxPlew and this is the market brief. Now, the political party conferences are now over and the general election must be held by the end of next year. Sunak therefore needs to consider the optimum time to dissolve Parliament, but the opportunities to have a big change in voter opinions are running a bit dry. Hunt's autumn statement on November the 22nd may have some sweeteners to sway the electorate, and the most obvious of those is taxation. But Hunt has already said that it's too soon to be cutting taxes. But there are many who will feel that he may still be persuaded by his party. Once the tax cuts are out of the bag, the election will be expected to follow sooner rather than later. But if Hunt's current stance holds firm, then tax cuts may be pushed to his spring budget, and that will mean the election will be held closer to the year-end deadline. That would allow more time for economic recovery and could be the best chance the Tories have of turning around the opinion polls. Do you think they'll stick around in power until the 11th hour? Let me know in the comments, please. Over in the US, we had the Fed minutes out last night. They showed the Fed is facing a pretty difficult decision at the next meeting. They agreed that inflation is the priority and it carries the biggest threat to any soft landing. But the methods to tackle inflation are creating some divisions. As we know, Powell is a hawk. He wants to raise rates further and get the job done. A rate cut can always follow in due course if they go too far. Others feel that rate hikes take time to work through the system and a pause of at least 3 months might be prudent. That is certainly supported by housing market data. That sector is heavily affected by rising interest rates, but only recently has shown any real decline. The risk with another rate hike in the November meeting is that it could be a hike too far and create problems with economic growth further down the line. And nobody wants a recession, do they? Today we have inflation data due for September, which will surely help add fuel to the debate. Headline inflation is forecast down to 3.6% and the core may drop to 4.1%. If this hasn't really fallen month on month, it could signal that inflation is becoming ingrained in the US economy and it may increase the chance of a November rate hike. There really is everything to play for. Saudi Arabia announced an increase in oil production that helped curb the higher oil price, and that was as the dollar index fell again yesterday, down to 105.55. Sterling peaked around 123.35 against the dollar yesterday. We kick off this morning around 123.25 against the dollar, about 115.90 against the euro, and euro dollar is around 106.35 on the open this morning. That's it from me, gonna dash for cover. Hope you have a good day.
If you do not have a clue, then just tweet through and ask FxPlew.